Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex, gold, and S&P fundamental and technical analysis for the week ahead, starting the 29th of June. Hope you all had a blessed trading week, and please don't forget to like, subscribe, and share this video content if you find my videos every weekend useful. So, getting into the week ahead, and this is from tradingeconomics.com. Next week, investors' attention will turn to developments in trade negotiations between the US and its key trading partners, with the July 9th deadline that marks the end of April's 90-day pause on US tariffs approaching. Markets will also focus on the ECB Central Bank Forum, where top policymakers, including Fed Chair Jerome Powell, are expected to provide insights into the economic and monetary outlook. On the data front, the US jobs report is anticipated to reflect continued softening in the labor market. Additional key economic indicators to watch include the ISM manufacturing and services PMIs, US exports and imports, China's official and PMIs, Eurozone inflation, German factory orders, Japan's business sentiment survey, and Australia's trade figures. So, a few things going on this week. We should potentially move the market. So, starting off really on understanding where, I guess, risk sentiment is and looking at the VIX, the S&P, gold, and the 2-year Treasury bond yield, the US, and really, we're in a more risk on scenario now. So it's important to understand where investors are looking to flow into and out of. And really, when you look at the VIX, sorry, over the past week, and we had obviously a de-escalation. Iran and Israel both claim wins as Trump brokered truce holds, right? So a de-escalation in the Middle East, and then this was Monday, Monday opening, or actually Monday night, and then we had really the VIX, which is a risk sentiment as well as a volatility index. We had pretty much it sell off, so anything below 20 is considered a bit more risk on, and investors focus usually around a yield return, and we've seen that. And this is basically the week, from the beginning of the week, and you can see Monday, as the VIX went to the downside, the S&P, we're talking about yield, risk on asset, went to the upside, right? Gold as well, again, kind of sold off a bit. To the downside, trended to the downside, and bond yields, I guess, are more focused now um, on the fundamental side of things rather than the risk sentiment situation, and they've sold off a bit as well. I say sold off, but really decreased in value, in alignment with interest rate expectations. And so, yeah, it looks like we're in a bit of a more risk on environment. So then we can go to, Forex, and look at the pairs in which we can better assess which one we should be really buying and selling. So, looking at the dollar index, and the dollar index is this is the equally weighted dollar index. I'll put a link on the top right hand side, so you can watch the video on how to put this and plot this on your chart, and really how to use it. um and so we are at a bit of a decision point where, if we scroll out a bit, ever since 2022, the dollar has been bought around this area, right? Question is what is gonna make the dollar bounce from here, right? Or is it going to basically break down? So, a lot of traders looking at this area here. And really, for me, it's probably about the jobs numbers. Overall direction of the dollar should really be to the downside. I think at the moment, a lot of negative sentiment, de-dollarization story when it comes to the dollar. Um, and so, looking at the United States Discord channel, news channel, we can see really a summary from the article: US dollar softer, US data keeps dollar negative momentum going. And this is from an article, from a bank article that was posted. So just to summarize, it says here Fed cut expectations. Remarks from Fed officials point to increasing openness to a July cut, particularly if inflation stays low and labor market softens. Markets are pricing in this dovish shift. And it says here as well, weak macro data. So US Q1 GDP was revised down to 0.5% quarter on quarter from 1.2, with weak consumer spending raising concerns about forward momentum. Additional data due could reinforce this soft outlook, and the market is pricing for rate cuts. And the market is now pricing in a 60% chance of three 25 basis point cuts this year. Weaker payrolls and CPI due July the 5th and 15th, respectively, could solidify expectations for a July cut. And so, yeah, the dollar at the moment doesn't look great. Again, lots going against it at the moment. So, in my opinion, I think the dollar, any pullbacks on the dollar should really be shorting opportunities. Although, of course, this week, FOMC will confirm that. If FOMC comes in and it is, comes in higher than expected, jobs, employment shows, a robust economy, then of course we could get a move to the upside. But again, as the article points out and kind of confirmed by the FedWatch tool, if you go to SOFR Watch, it looks like the market is pricing in about three rate cuts for this year, first beginning in September, then October, then December. So actually around 25 basis points now. Sorry, 25, sorry, 75 basis points according to the SOFR watch. So the market thinking and pricing in a bit more of an aggressive uh, dollar, or Fed, I should say. And if the data does support that, if the data shows that, justifies those rate cuts, maybe rising unemployment, slowing employment, and things like that, and inflation, then of course we should see continued downside for the dollar on pullbacks. Looking at the dollar yen, and the dollar yen this week did sell off from last week. Pretty much this was Monday, and the de-escalation of the Middle East tensions caused the dollar to kind of weaken a bit. The yen is going through a bit of a transition period. Although the central bank is looking to hike rates, or the market thinks they're hiking rates this year, the bank seem on this wait and see bias. So it says here that the Bank of Japan board members discussed inflation running at a faster pace than expected, while they continue to see the need for vigilance over high uncertainties related to US tariffs, according to a summary of opinions from their policy meeting last week. Even though prices have been somewhat higher than expected, it is appropriate for the bank to maintain its current stance, regarding the conduct of monetary policy, given the downside risks to economic activity stemming from US tariff policy and the situation in the Middle East, one of 9 board members said, according to a brief record of the June 16th, 17th meeting released on Wednesday. Others also referred to inflation running at a higher rate than expected. And what happens is when inflation is running at a higher rate, it forces the bank to hike rates, and so the market might be pricing in, or is just waiting for, I guess, a trigger to kind of um, or the bank to really kind of get more hawkish. But at the moment, they are on that kind of wait and see mode when it comes to interest rates, because of the potential deals that they have to do in terms of tariffs. So I still think that the dollar yen is a more of a sell bias. So any pullbacks up into this area here, I think is going to be decent for a sell bias. If you are looking to buy the dollar, you can probably look to buy the dollar right now. But ultimately, I think the dollar yen should be more of a sell than a buy. So moving on to the dollar Swiss and dollar Swiss with the dollar weakness continuing. There's been really a kind of a bit of an abnormal move in the Swiss franc. We've been talking about it this week in the group. Really, the Swiss franc shouldn't be as strong as it is, but it seems that it is, and it's pushing the dollar Swiss a lot lower now. Um, when we zoom out and look at pretty much the last um 10, 15 years, the last time prices were this low was back in 2011, and so we really haven't got anything to kind of go off in terms of a level of demand. Now, if you guys any of you guys out there are watching this who are in the group and trade stop hunts, you'll understand that, and I go over this by the way as well. This trade set up in the members group area. If you go to the trading videos channel in the Discord group, I posted the in-depth weekly analysis for members only, so you can kind of click on it. It's an hour and 22 minutes. You've also got the weekly, the midweek video as well, the group call, live group call, and that was on Wednesday, as well as all of the week's videos and past videos as well in there. So it's all in here. You can see, click on any of these videos and see previous analysis. Now, I go over kind of the stop hunt, potential stop hunt trade in the members video, so I'm not really going to go over it here. But if you are looking for a stop hunt, it should be around this area. If you're looking for continued sells, then really the nearest zone is going to be around these highs here. What I would probably say is if you're looking to sell the dollar, I would definitely say, or for me anyway, there are better trades out there to sell the dollar against, in terms of there's better currencies, stronger currencies than the Swiss franc. So I'm not really interested in this from a sell perspective, but if data confirms that there's maybe some short-term bias on the dollar this week in terms of a buy, so maybe waiting for non-farms this week, unemployment rate to kind of show that maybe there's not going to be a July rate cut, or the chances of that being diminished, then I think the dollar should strengthen a bit and there's potential for the upside. But again, wait for the stop hunt setup if you are looking to get involved in that long. But that would really be the only way I would look to buy the dollar. It would be against the Swiss franc, because I think the Swiss franc is the weakest currency fundamentally, but price isn't proving that at the moment. But I think eventually it will, as long as risk remains more on than off. Looking at the dollar CAD and the dollar CAD. The CAD didn't have some great news this week. I think their month-on-month GDP ended up being coming into the negative, but it wasn't as bad as maybe first thought. I was in the CAD Swiss trade, buying the CAD against the Swiss franc, and I was doing some analysis afterwards. I came out of the trade. I'll go into that a bit later on in the video, but ultimately the Bank of Canada are a bit more focused on inflation than they are on GDP. So with that being said, you may not get the sell-off on the CAD that was probably expected. But looking at this currency pair, again, not really a pair that I'm really interested in. But if you are, you can look for, if you look for a pullback up into one of these zones, you can look for either a sell and short and buying the CAD, or if you get some good news, if prices move to the downside, what you can do is look for a move to the upside, right? So if prices pull back this week, and then you get some good news out of the from the FOMC, or maybe on Friday, or anticipating that, you can look to get in around here, and then hopefully the data supports your bias, and you get a bit of a buy on the dollar. Pound dollar this week, of course, the pound really kind of outperforming the US dollar. So, but I think there could be some potential weakness coming in to the pound right now. So we're at these highs here, where you've got a bit of a supply zone, but the supply zone is really from from January the 22nd. So not too sure if this is valid, but it's there anyway. There is a level of support and resistance historical. Let me just actually I'll move this up a bit rather than creating a new one, new level. Yeah, so that level's been traded historically in the past, and it aligns with a nice supply zone. So when we fast forward here, we could look towards either that being a little bit of a stop hunt or just a move to the downside. Now, if you're looking for any kind of short trades, you would really expect, you know, one of two things to happen at the bare minimum: either the pound to start to be a sell because of a fundamental change, or the dollar to kind of strengthen. Both would be obviously good if you are looking for a short trade, but I do think that the path of these resistance is still more to the upside, whether it bounces from that demand zone or the 132s around here. Now, when we look at there was an article, again, another bank article that was discussing the Bank of England speakers. It says here the summary from it was that there was a clear easing bias. Multiple Bank of England Monetary Policy Committee members indicated a clear dovish tilt with a particular focus on labour market weakness as justification for further cuts. And the Bank of England appears poised for further easing, potentially via rate cuts and or a slowdown in QT quantitative tightening, with a formal review outcome due in September. So there is the potential for the pound to weaken. I think the pound has been outperforming, basically due to dollar weakness. But I think overall, there is cracks on the horizon in terms of the fiscal budget for the UK. Keir Starmer doing a bit of a U-turn, and on welfare issues and payments. And so I do think that the pound could be a sell in the coming weeks, if not this week, in the coming weeks. So any pullbacks, you could look for a sell right now. Not really a pair that I'm interested in going short. I would rather wait for a long trade, maybe down into these demand zones. To be fair, I'm looking for shorts on the pound, but just not really looking to buy the dollar, unless there's of course some sort of catalyst for me to buy the dollar, which would be maybe FOMC data. Pound yen. Apologies. Now this is a pair that I'm looking to potentially short the pound against. So for now, this level looks quite nice. Looking for a potential short in this area, right, which would be nice for a bit of a pullback. I'll probably put in a small position. Of course, you have manufacturers index and consumer confidence. If those numbers support buying the yen, then of course this should be a bit more of a sell. I think the yen's been weak for and unexpectedly weak, to be fair, for a little bit, and I think it's probably due for a bit of a pullback at the very minimum. If you are looking for a buy, then the first demand zone would be quite tight, which is right here, and you can look for a buy probably around this 196 if you're looking to still buy the pound against the yen. But I think there's the potential for a bit of a pullback on this yen, but again, it needs to be supported by some data, either for the yen or negative data for the pound. Looking at the euro index, and the euro index again is a culmination of um, sorry, 1 second. Let me just go back and see if I can get rid of this. That's it. Uh, so yeah, the euro equally weighted index is just a measure of euro strength versus all of the other currencies like the pound, the yen, the CAD, the Australian dollar, Swiss franc, New Zealand dollar, US dollar, and we can see that the euro really has been making higher highs overall. When we look at the euro channel, it says here that blockbuster euro trading volumes in the 300 billion plus foreign exchange options market are another sign investors are betting the currency's gains may have room to run. FX traders are focusing on euro call options, which gain in value if the currency rises versus the greenback, and the volume of contracts betting on a break of 120 climbed over the past week. The data showed it's a signal that fresh funds are piling into bullish euro strategies as the US trade war and deepening fiscal jitters dent demand for the dollar. Not only the dollar, it says here as well that trading volume was more than 56 billion on Thursday, according to the Depository Trust and Clearing Corporation data compiled by Bloomberg. That's more than quadruple the volume of the yen, the second most traded currency at 13 billion, and some 5 times more than volumes on the Canadian dollar, which came next. So it is actually still, in terms of the euro, very, very bullish. Money piling into the euro. So ultimately, no reason to kind of sell the euro at the moment, although we could see a pullback. Pullback would be just basically a way to buy the euro for cheap. So yeah, that's where I am overall in the euro dollar currency pair. You're seeing that, play out. The euro just making higher highs, reached 170, 117.50s. And so again, really just waiting for this pullback. If we can get a better pullback on this area here, I think that's going to be a nice technical zone to look for a buy trade. Really nothing else to kind of say about this. I mean, you've obviously got as well, if you trade, things like trend lines and things like that, you can see that there is some confluence in and around that zone there as well. So yeah, very nice, technically and from a fundamental perspective, as long as the dollar remains bit weak and the weak supporting data, any price pullback should be buying opportunities on the euro dollar, euro yen. The euro, I think, has the edge at the moment, especially in a risk on environment. Euro, I think any pullbacks, I prefer probably more down to the 166.50s, 1660 round number before looking at going long. Although the yen, I think it could be a buy this week. I think the path of these resistance is probably still to the upside. So moving on to the euro pound, and the euro pound again, not really a pair that I'm interested in, although I do think that the euro probably has the edge over the pound at the moment. I think there's probably more upside potential in this move. So I think a move higher, and then probably a pull back into this area here would be really the trade that I'd be looking for. The euro, the European Union at the moment are cutting less. There's less being priced in, less cuts being priced into the euro than there is for the pound, and so I do think that ultimately, if prices do something like this, or even if they move to the downside a bit and come down to this area of demand, then I think we should still be buyers, or I'm going to be a buyer of the euro as long as the data supports it. So moving on to the Australian dollar, US dollar, and not really a pair I'm interested in trading from a fundamental perspective. I think the Australian dollar are the central bank that are looking to cut the most, and unless really the I think the Federal Reserve end up cutting less, which at the moment it seems like they're probably cutting the same. It's not really a pair that I'm really interested in, but from a risk on perspective, and maybe like a de-dollarization theme, in terms of the market being quite bearish on the dollar. I think any pullbacks into this demand zone should be a decent area to look for a long trade. You can also break that up when it comes to support and resistance areas. Somewhere around here looks a bit decent. So yeah, probably the top end of that zone there would be really more of a decent pullback in my opinion. But yeah, not really a pair I'm interested in. Looking at gold, and although we looked at it earlier, I think gold overall is for me a buy from an investment perspective. But in terms of trading, I think the thing that would hold up gold at the moment is really just more dollar weakness. So the lower the dollar goes, we could see a little bit more of a move to the upside, but maybe a pullback into maybe a deeper zone before looking at going long. Now, again, in a risk-off environment doesn't mean that gold is a sell, and in a risk off environment, it means that gold is a buy. It just means that in a risk on environment, interest rates then take more of a front role in terms of yield. And if the Federal Reserve and central banks around the world are looking to cut rates, then of course that will still help gold. Gold doesn't have a yield or anything like that, or produce any kind of yield, but the lower interest rates have to go is the more that central banks and investors may still feel that they could buy the safe haven asset in order to protect against any kind of rising inflation potential. And so we're not out of the woods yet as well when it comes to tariffs either. So there is still negotiations going on. So I think that could also still support gold as well eventually. So gold, although you can look for sell trades as well. So looking for supply zones in and around here and around, actually probably all the way up here. Um, I think gold at the moment is going to be more in a bit of a ranging auction sideways type movement, where investors are probably thinking to themselves, well, there's no reason for prices to really kind of break out more to the upside unless there's a new catalyst in terms of a risk off event. So you can see the stock market going higher, so money's probably flowing into the stock market at the moment, which means that maybe in the short term, if you're looking for any kind of shorts on gold, there could be that at the same time. But again, gold's a little bit tricky from a trading perspective. Short term, I'm not really sure on the direction of gold, and if you're not sure, then just pretty much stay out. The S&P seems to be making new higher highs. We're at all-time highs at the moment, if not past that all-time high. Amazing considering where we were in April, and the uncertainty, and then we've also had the Middle East tensions, and now we're at pretty much back to all-time highs, right? So I think again, pullbacks. I was saying this last week. I was thinking that prices may look to, pull back a bit deeper, right, into deeper zone, maybe the 5,650s, 5,600s, but it just kept going higher. So I'm assuming that you always want to be a buyer on pullbacks anyway. So if prices make new highs, just wait for a pullback on this area here. Now, this could actually be a decent area to look for a short, because this could end up being a bit of a stop hunt. You could draw in the breakout traders to go long and then reverse on them, because there's a lot of liquidity probably resting below here as traders, FOMO in to new highs. So for me, the direction of travel should still be to the upside. Of course, no one has a crystal ball. We don't know whether tariffs are going to escalate tensions again, between countries. But ultimately, I think any moves to the downside should really be buying opportunities. I'd rather that than try to look for any kind of sells, because I think there's going to be a lot of traders looking to probably sell around here, and it probably may look to go even higher and draw those traders in as well. But anyways, direction wise, it should be to the upside in my opinion. So looking at giving a bit of a trade update. So this was from last week. Again, managed to get in on two positions a couple of weeks ago. Ended up uh, getting a one-to-one on one position, which was a profitable trade. Still in this trade, and so the New Zealand dollar really, I think, should be the stronger out of the two. They're potentially ending their rate cutting cycle, the RBNZ, whereas the Australian dollar and the RBA are looking to continue cutting rates. So I'm assuming that prices should at some point move to the downside. I wish it would obviously happen sooner rather than later, but ultimately, I'm only in one position there, and this is a profitable trade. Even if I lose that position, I'm in profit. So I'm still in that trade there. Ended up being stopped out for two small losses on the Swiss yen. Now again, the Swiss yen. The Swiss franc really acting unusually strong and appreciating in a risk on environment where everything else was pretty much showing it was risk on. The Swiss franc appreciates in a risk off environment. So, of course, on the Monday, we had the escalation on the Middle East, which caused a gap. I was already at a break even on this trade to the short side. So I ended up losing a little bit more than I anticipated on the gap up on some of my accounts. Some accounts I do have guaranteed stop losses. Some of them I don't, but this one affected the ones where I don't have the guaranteed stop loss. So on those accounts, I ended up losing a little bit more than I anticipated. So it is what it is. That's why you just keep the risk to a minimum. And then I ended up getting in again around these highs here. Now, this high was due to the absolute market high. This is pretty much all-time highs. If we look back, we've never been higher than we are at now. And so and so looking at where we were, I ended up taking another trade, and it was around here. Prices ended up going in my favor, right? A 1-to-1. And now, typically on a 1-to-1, I normally take around half a position or a little bit more, get myself to break even. Now, on the Monday or the Tuesday morning, of course, de escalation, was announced. And I figured that the Swiss franc should sell off in a risk, when there's de-escalation intentions in the Middle East. It was rising because of the risk off sentiment. So when I entered here in terms of risk on, or more risk on, and price started to sell off, even though I'd hit my 1-to-1 target, I thought I would hold on to the full position. But what I did do as well to mitigate my risk is I cancelled my 50% and 95% pending order. So when prices ended up coming back against me, I was still only in one position rather than triggering me into three positions. Now, had I got into and left it open, I still would have probably been at a break even, to be fair, because that would have hit a 1-to-1 trade right here once it hit that level there. So that would have been a 1-to-1 there. And then this 50% would have actually hit a 1-to-1 as well. So actually, this would have been a profitable trade had I had just kept that in there, or at least a break even trade at the bare minimum. Break even because as prices move higher, I typically tend to increase my position size. So if that's 0.1%, for example, that'd be 0.2%, and this would be 0.3%. Right. So if I win one, then I've covered basically these two positions. If I win that one, for example, I cover this position and it can't lose, right? I'm in a winning position. So, um, but I have some rules, and those are the rules. So if I hit a 1-to-1 target on just one position before it hits, pulls back and hits 50% or 95%, then I'll take some profit off the table. But in this position, I didn't. And again, it was really just due to the de-escalation. I thought prices would have went lower. Prices ended up going higher, right? And ended up stopping me out. So a small loss on that position as well, but I am looking to get back inside on this short trade. I don't think the Swiss franc should go much higher than it is right now. So I was saying to the guys in the group, I'm looking for a stop hunt trade around this zone right here. And so if I see a stop hunt set up, I'm going to be getting in short and try and recapture the losses that I got from here and here, plus some more. I think there's plenty of downside potential, especially when you look at the daily, managing to get in at these highs. And if I can get in on a short trade, and I could probably look for maybe about a 6, 7, 8 to 1, depending upon my risk reward up here. So let's see what takes what takes place on that this week. And also as well, the CAD yen. So many of the traders were looking at this trade. Now, this was a great technical setup. The Swiss, again, having more of a short bias on the Swiss franc due to more risk on. The Canadian dollar, we were really waiting for the data to kind of support it. And data on Friday was the GDP, and GDP numbers actually came out negative. So as they came out negative, I just exited the trade. So as soon as it came out 130, and it came out as a negative, I was in two positions. So yeah, that candlestick there was where I got out. So I got out for a small loss on the market order, and then on on this trade here. Again, I probably got out somewhere around there, and yeah, so really small loss on this trade as well. So it was best that I exited the trade. I needed the data to support my, of course, buy bias. And if the data doesn't support the buy bias, then it's best to just get out of the trade. But strangely enough, I should have, if I didn't exit the trade, this would be actually a break even trade, because ultimately prices ended up bouncing from around here when prices triggered me into prices may have triggered me into the 95%. And if I stayed in, then it would have hit a 1-to-1 there, would have won at least 0.3% on that one, would have had 0.2 0.1% still in, wouldn't have been stopped out just yet. But again, a bit of a tricky one. I'm going to reassess. I might re-enter into this trade on Monday, Tuesday, depending upon the setup that actually occurs. So still open to buying a CAD Swiss based on really more Swiss weakness than maybe CAD strength. But yeah, I'll let you guys know, of course, update you next week. So that's it for this week. Trade updates and the trade analysis. And I'll see you all next week. Take care.